This is our Forex blog for July 28th, 2011. And like most days, we really want to trade the strong currencies against the weak ones. The Japanese yen has real-time strength for most of the day. The daily, weekly, monthly trend are up, whereas the dollar starts the day with some intensity to the downside, and the weekly, monthly trends are down. The weakest currency of all of them is the euro. Second weakest is the dollar. Pound and CAD are also relatively weak. The Swiss is strong, Australian, New Zealand, and yen. So you don't want to trade the Australian against the yen, or even the Australian against the New Zealand or the Swiss, unless there's severe extreme weakness, in real time. Your best bets are to trade the weakest pairs, like the euro against, for example, the yen, or the euro against the Australian, Swiss during the brief times here and here where it's strong, the New Zealand until about 4 o'clock. So let's start by looking at the euro-yen short coming in to today. Notice prices underneath the hourly. Notice the previous day's low right here. And I did run this overnight, so our IntelliStops are 100% accurate as far as what you would see live. You could just simply, if the price is underneath the hourly, and this is one of the top 2 or 3 weakest of all the currencies, sell here around 112. It gets you out right here. So you made about 35 pips on that one. Short again right here, 79, out right here, very small profit, less than 10 pips. Short again here, break even. Short again here, or maybe even lost 5 or 6 pips on those 2 trades. Short again here at 70. It had you out somewhere down here at 11 for a nice 60 pip profit. And when you get down to the lower containment bands, it's much more likely to reverse. So you might be hesitant to take these trades. This is a Fibonacci predicted likely low, and this is the second Fibonacci level, the 1.618. This is likely to be the lowest low of the day unless you have extreme weakness. So you kind of have a head and shoulders pattern down there. You might, when the market breaks out here or here, look to go long, usually for a pullback up to the hourly. 3 and 4 hour counter trend signals usually mean the next wave down is the end of this previous move. So you put that on there. That would be 111.05. If you start to look, especially when it kind of came down here and double bottomed, you get into a counter trend trade, scale in as it goes a little bit against you. You can average your price down somewhere around 111, and usually the market retraces about 30%, or 30 pips I mean. Remember, the Australian and New Zealand are also strong until about 5 o'clock for the Australian and 4 o'clock for the New Zealand. So let's bring up the Euro Aussie. Notice again prices underneath the hourly, and whenever you bring up the chart, historically when you first load it, the IntelliStops aren't nearly as accurate as they are in real time, but they're an approximation. Some of our tools and statistics in there only work live. But nonetheless, when prices underneath the hourly, you got a small profit here, loss, entry right here at 89, and it went all the way down to 54 for a nice 40 pip move. Also note, when it double bottomed right here, this one did return back up to the hourly, which is oftentimes what they do once they have made a low. It made a lower low with less statistical weakness than before, and a nice explosion up about 50 pips. And the hourly is a very good place to go short as well, and this one only pulled back about 10 or 15 pips. However, oftentimes they'll return to the lows. Let's look at the Euro New Zealand. Also note, a pullback up to the hourly last night. Again, great place to go short when the currency's weak. Small 30 pip profit. Short again right here. Small 5 pip profit. Short again here. 60 or 70 pip profit. When it gets to the lower containment band, you got to be really careful. If you do short here, and as it's falling, you don't see as much weakness, get out of the trade. The pound also was weak last night, not quite as weak as the euro in terms of the longer term chart, but you can also look to sell the weak pound versus strong yen. Notice, again, pull back up to the hourly. Very safe, high probability place to short. Fell about 30 pips. Counter trend trade here. I mean, not a counter trend trade. You wait for the counter trend trade to end. Trailing stop to get hit. That one pulled back about 20 pips. This one went short here, and it barely generated even 5 pips. And if you tried to buy the double bottom right here, especially after getting a counter trend reversal, which you can see this signal um, led to the down move, and this signal led to the up move. Um, nice move back to the hourly, which you can't see because it's the same color as our fib area, but it's around 127.15 here. If you got into that on this breakout right here, you made 25 pips on a counter trend trade. Very high probability. CAD was, strong for most of the day. However, the longer term trend's down. That being the case, it's not the highest probability trade. But if you wanted to trade the CAD against, another one that's super weak, like maybe the dollar or the euro or even the pound, not a bad thing to do. It was strong from about 3 to 5, and then again from 7 to 9. So let's look at the EURCAD. From 3 to 7, you can see prices underneath the hourly. You got a profitable trade here. You have a very profitable trade here. And this is an iffy trade because it's underneath the lower containment band, but it's extremely weak. And that one also generated from 53. Trailing stop would have got hit somewhere around here. 25 pip profit. And when currencies are underneath the lower band, especially when they come down to the Fibonacci profit target, you usually get a bounce. Notice the 1.382 fib. It's a monthly S2 pivot level. It also made a lower low with half the weakness it had before. Very high probability counter trend trade, being 40 pips underneath the lower likely statistical low. Usually price hits that and you get a bounce. So whenever the market is this weak, if you had got into a trade right here, it's not likely to work. It's extremely weak. But the euro is not really that weak when it made a lower low against all the currencies. It's stronger than some of the currencies. Right here, it was the weakest one. It was weaker than every currency. And so that lets you more safely get into counter trend trades when they're this far underneath the lower band and you spot divergence like that. Beautiful 60 pip counter trend trade, and it got you out somewhere right here at around 61.